Trump just hit 150 countries with a harsh warning: pay tariffs or get out. But things quickly fell apart. Markets crashed, friends disappeared, and even Walmart said, "We can't handle this." Behind the scenes, his own advisors scrambled to stop the damage. No deals, no power, just the world pushing back against the US. What was supposed to show strength might actually break the country. Stay with me, because it gets worse. What do you call it when the world's biggest economies start sending tariff bills like parking tickets? On May 17th, Trump said 150 countries would get letters, not offers, not talks, but demands to pay tariffs. Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick would send these letters telling countries what to pay to do business in America. The problem? No country agreed to this. Even close U.S. friends were shocked by the sudden move. Trump said he couldn't meet everyone, but really his team was behind and struggling after tariffs in early April caused markets to crash. The stock market dropped fast, wiping out $1.8 trillion. Instead of talking, Trump tried to force it. Slapping tariffs on 150 countries without talks wasn't strong, it was desperate. And countries didn't accept it quietly. There's a big difference between making a deal and sending a bill. And Trump's letters crossed that line. By May 18th, no countries had actually gotten the letters. White House aides said the letters were just a plan for talks that never happened. Trade experts said you can't just set tariffs by memo. That's not how trade works. Still, Trump said the tariffs were fair. What he didn't say is that tariffs are import taxes paid mostly by American businesses and shoppers. A 2024 report showed 92% of past tariffs cost Americans, not foreign companies. The new tariffs raised rates to 10%, with some hitting 50% on certain countries. These hits especially hurt stores, construction, and factories, many still recovering from the pandemic. The letters were less about policy and more like bills that American consumers would pay. When Trump first put tariffs on in April 2025, he called it Liberation Day. But really, it brought chaos. Tariffs went up on all imports, with penalties up to 50% on 60 countries. Weeks went by, no trade deals. Key partners like Japan, South Korea, and the EU stalled talks. The IMF said global trade dropped 1.6% in April, the worst monthly drop since the pandemic started. At home, prices rose. The government said consumer prices went up 0.7%, with big jumps in clothes, electronics, and household goods, all linked to tariffs. Walmart warned in May that prices would go up on 8,000 products because of higher import costs from China and Mexico. Even with inflation rising, Trump's team kept saying deals were coming. The White House said America was getting stronger, but no deals showed up. Instead, money left, shoppers worried, and experts called the tariffs bad economics, not real negotiation. The damage didn't stop there. Trump promised 90 deals in 90 days. 3 months later, 0 deals. The only public deal with the UK had a note saying it wasn't legally binding. Talks with South Korea and Japan, once close, stalled over unclear tariff rules. China, once seen as ready to work with the US, only agreed to keep talking. No dates, no promises, just pictures. The gap between what Trump said and what actually happened grew huge. On May 14th, Commerce Secretary Lutnick said they were getting results faster than ever. 2 days later, government data showed U.S. exports dropped 2.1% in the second quarter, erasing any benefits from promises. Trump's deal count? Made up. The gap between announcements and real deals? Growing fast. This trade fight looks dramatic on TV, but for everyday people, it means higher prices and worry. A May 2025 survey found 74% of Americans said tariffs made inflation worse. That's up from 58% just a month before. Small businesses also felt the hit. 42% delayed investments in April because tariffs made things uncertain. This tariff fight, meant to make America stronger, is breaking trust, stopping deals, and hurting families. What's next? The crisis is just starting, and it's about to get harder. Walmart's Q2 report hit like a thunderclap. They warned prices on imported goods would rise between 5 and 15%. The reason? Rising costs coming from countries like China, India, and Mexico. Almost immediately, Target followed with a warning. Prices were going up everywhere, in electronics, furniture, and clothing. Big stores like Walmart and Target might be able to handle these price hikes, but small shops didn't have that luxury. They were caught in a squeeze with no way out. Raise prices and risk losing customers? Or keep prices steady and lay off workers? In many rural towns, where margins are already tight, some small stores simply closed down, unable to survive the pressure. This wasn't just about numbers on a page. It was real people's lives falling apart. Families who had worked for years to build their businesses watched helplessly as everything crumbled. The U.S. Chamber of Commerce reported that in April alone, more than 1,300 small businesses filed for bankruptcy, a staggering 23% increase from the same time last year. Behind every number was a story of loss, heartbreak, and struggle. While politicians stood on stages and said America first, it was the shop owners who had to tell customers why a simple blender now costs 20% more than it did last spring. When Trump declared the country was winning on trade, it was hard to tell who he really meant, because the winners were not the American families paying at the checkout line. They were somewhere else entirely. By May 2025, Treasury Secretary Scott Bessent tried to defend the constant changes in tariffs. He said the confusion was strategic uncertainty, meant to keep other countries guessing and off balance. But the harsh truth was that American businesses were the ones getting hurt the most. The numbers told the story. Bloomberg Economics reported a sharp 11% drop in spending by U.S. manufacturers in April, the biggest since the pandemic shutdowns. Almost 40% of small businesses stopped hiring, frozen by fear and uncertainty caused by the unstable tariffs. This wasn't a clever plan. It was a paralyzing freeze that stopped the economy in its tracks. Businesses couldn't predict how much things would cost. Retailers scrambled to stock shelves without knowing the prices. Exporters hesitated to make deals because they couldn't be sure if tariffs would change tomorrow. Growth stalled, and the country's economy hit the brakes hard. A survey from May showed 62% of America's top business leaders postponed major investments because the tariff rules kept changing unpredictably. Trump's tariffs didn't hurt other countries. They hurt the U.S. economy itself. Economists now call this a self-inflicted economic freeze, a dangerous chill that spread through every corner of the market. But the worst was yet to come. These tariffs weren't just small fees, they were huge taxes on imported goods. The U.S. International Trade Commission reported that the average tariff rate jumped to 38%, adding a crushing 30% on top of the usual 8%. These weren't just numbers on paper, they meant real price hikes for everyday Americans. The National Retail Federation reported that in April alone, prices for imported clothes rose 19%, electronics 12%, and home goods 14%. That cotton hoodie made in Bangladesh? It now costs $7 more at checkout. A microwave from China? $28 pricier than before. Experts warned that if these tariffs stayed high through the summer, the U.S. economy could lose $128 billion in total output, a massive hit that could slow the country's growth for years. Even Walmart, America's largest retailer, warned in their May earnings call that these price hikes were not just temporary spikes, they were structural changes, driven by sharply higher costs from their suppliers across more than 6,000 product lines. Trump claimed his tariffs would level the playing field for American workers and companies, but the reality was clear. American families were the ones paying the price, with no sign that foreign governments were cutting their own tariffs in return. This wasn't economic power, it was a silent tax that Americans had to pay every time they shopped. And that tax was only getting higher. Then came April 15th, after a brutal week in the stock market. The S&P 500 dropped 5.3%, and the Dow lost 1,700 points. Suddenly, Trump announced a 90-day pause on most new tariffs, except those on China. But this pause wasn't planned carefully. It was panic. A leaked Treasury memo revealed grim forecasts. Core inflation could rise above 5% by July, and American consumers could lose $200 billion in spending power every year if tariffs continued on their current path. Major companies were already feeling the crisis. Home Depot canceled $60 million in appliance orders. General Electric froze a big project in Indiana. The U.S. Chamber of Commerce issued a rare public warning that trade uncertainty was destabilizing investment and capital flows. Trump tried to spin this retreat as a smart negotiation move. We wanted bargaining power, he said. But power means control, and what happened was a retreat under fire. Instead of bringing other countries to the negotiating table, these tariffs pushed the U.S. economy to the edge of collapse. Even the 90-day pause didn't bring relief, because the White House warned that if trading partners didn't negotiate fairly, huge 50% tariffs could come back in a flash. The only thing certain was more chaos ahead. The bluff didn't break foreign economies. It broke America's credibility. Gary Kahn, a former top economic advisor, was blunt. Trump didn't understand tariffs. He thought foreign governments pay them. They don't. American businesses do. Around the world, key trading partners waited Trump out. The European Union said nothing. Japan paused talks. Canada moved closer to China, signing a $14.2 billion natural gas deal Beijing had originally offered to the U.S. Even America's closest allies grew cautious. France's finance minister said, "We need steady partners, not sudden and unpredictable changes." Trump thought chaos was strength. The rest of the world saw it as weakness. Markets adjust. Governments plan. When the world saw no clear rules or steady leadership, they ignored America's threats.
The cruelest part?
The only ones still caught in the middle were the American businesses Trump claimed to protect. Watching customers buy less, costs climb higher, and relief never come.